about building a trading plan. Now, in tonight's class, I'm going to use the term security, but I might say the euro, I might say Facebook, I might say Google, I might say Bitcoin, but I'm not actually referring to any specific product because tonight what we're discussing is what you have to do and our investment concepts that work with all publicly traded financial instruments in which an open market exists. Similarly, I intermix the terms investing and trading. Now, typically, an investor takes a longer term position while a trader takes a much shorter term position. In either case, the basic concepts and techniques presented in this class are equally adept, and we know the difference between investing and trading. Now, I give this class quite often, and sometimes I feel like I'm lecturing, maybe because I'm old, maybe because I've been trading for a long time, but sometimes I feel like it's a lecture. But I don't mean it to be like a parental lecture. I mean it to be more like a lecture that a professor would give. I want to share some information with you, but it's vitally important that you understand how important it is to use this information. So, in order to become a successful trader, you need to develop a written trading plan. And this is where we have lots of failure. And this is why I say I don't want to sound like I'm lecturing to you. But you have to actually write it down. You can type it on a computer, but you have to write it out. And basically, it's your trading Bible. You're not writing down when I'm going to use Fibonacci and support and resistance and I'm going to make my trade. This is a detailed plan. It's your blueprint because lots of you have strategies in your heads and you put them on your charts, but you never actually work out all of the steps. And you'll find that when you put it on paper, you're overlooking things, you're missing ideas, you're missing steps, you're taking shortcuts. Not that you intend to, but you just do. And what happens, this leads to failure rate. And this is why so many people lose money because everybody needs to work it out. So there is no such plan or no such thing as an ultimate trading plan because there's no two exactly the same traders. And each and every one of us have a different trading plan because it incorporates our trading style, our strategy, our risk tolerance, our market experience. It incorporates the days that we have time to trade. Some people only can trade one day a week. It's the day off. Some people have time in the afternoon. Some people trade during the lunchtime. Some people are full-time traders. All of this goes into your trading plan because you'd be surprised how important it is to have a structured schedule. It's ultimately important. You know, the markets are different on Monday than they are on Tuesday. They're different in the morning than they are in the afternoon. They're different beginning of the first week of the month and as they are from the third week of the month. And if you're jumping all over the place, you miss all of these things in your decision making because you're not taking in consideration that this happens every Wednesday, or every Wednesday we have a lot of volatility in the morning, but we don't have that volatility in the afternoon because you're only trading Wednesday afternoon. And so tomorrow you have a day off and you're going to trade Wednesday morning, but you don't realize that is different. And it's also better to develop one's own personalized trading plan and modify it as your experience grows. Now, if you search the internet, and I'm sure all of you do, for a trading plan, guess what? You're not going to find any. It's not like a business plan. It is, but it's not an Excel spreadsheet that you're just putting numbers and figures in. So there's not one you can even buy. Sometimes there's a misconception that you need highly evolved market knowledge and years of trading experience to be successful. Look, I teach a whole class in triangle trading. It's a very simplified way of making trading decisions, but it works. Okay, now, it is great. It doesn't incorporate any indicators, any oscillators, okay? Because our strategy or our trading decision is the smallest part of anything that we have to do. It is, even when you write your plan, it is the smallest part. Now it's your starting point, but it is ultimately the smallest part of anything you have to do. Risk management and money management are the key points, but controlling the market and keeping yourself ahead of the market is more important than anything else. Now, however, we often see that more information we have, the more difficult it is to create a clear plan. More information tends to create hesitation and doubt, which in turn allows emotion to creep in. This can prevent you from taking a step back and looking at a situation subjectively. Now, I'm not saying to write this whole, postgraduate thesis. What I'm saying is start somewhere and putting it down. You'd be surprised when you take the thought out of your head and start putting it on paper, you're going to realize things that you're missing, things that you overlooked, things that you should be doing. When you write it down, you actually are working it out. It's like, I don't know, I can put it into baking a cake. If I thought I had the whole recipe to bake a cake in my head and I just pulled all the ingredients and threw them in the pan and in a mixing bowl and then threw it in the oven, I probably had a terrible failure. But if I wrote down all of the ingredients, I'd realize, you know what? I forgot that little teaspoon of salt, or I forgot that little bit of baking soda, or I put the wrong amount of baking powder in because I thought it was teaspoons, not tablespoons. But when I wrote it down, I realized that's too much. Now, if you don't know where you're going, any road will get you there. In trading, if you don't set out your plan for your trades and develop strategies to follow, you have no way to measure your success. The vast majority of people do not trade from a plan. So it's no mystery why they lose money. Trading with a plan is comparable to building a business. Now, tonight, I'm going to use an example all through the class. So we might as well start it out here. Okay. Now, for some reason, I don't know what it is, you want to open a retail store. Okay. For some reason, this is your dream. Now, you've worked your job for years. You've saved your money. The kids are grown up and out of college. It's the right time in your life to make this step. Okay? And you've been thinking about it long and hard. You've been on your job long enough that you've got your pension vested. It's time for you to move on. So you look at your bank account and you decide, you know what, you got $100,000 you can invest in a business. You know your mom and dad will help you out. Your brothers will get involved. Your best friends will put some money in. We all know that. Now, you happen to be walking through the mall, and there is the perfect retail store, and it's empty. The shop is empty with a for rent sign in the front, and you say, "That's it." So you go home, you call the number on that you have, you make an appointment to see the manager of the mall. You call your folks, you call your brothers and sisters, say, "Listen, I'm going to open up the store finally. I'm guessing it's going to cost me about $250,000 to get it open, but I've got 100, so I need to raise 150,000 more." And your folks say, we have an extra 50, and your brother says I got 15, and your sister says she got 10, and your best friend says he can do 25, and you raise pledges. Okay, you've got your 250,000 bucks now. Now we realize this is only really, it's a thing in your head. There's no plan yet. Just like you're trading, you have no plan yet. You have a whole bunch of dreams and maybe a couple goals. Now you call the guy in the mall, you make an appointment over to see him, and he starts talking about HVAC and mall upkeep and this type of insurance and that type of insurance and what hours you need to be open and all this other thing, what your build outs are going to cost, what your footfalls will be. You're falling into a world of lost. You never thought about this stuff. You never even knew about a lot of stuff. All of a sudden, you got to have four different insurance policies that cost a lot of money. That's not including opening a store, building out the store, you know, all the stuff that's involved, then stocking the store, the inventory, the computers. But in general, it's really not about winning and losing. It's all about being profitable. And you want to open up a store that's going to make profit. So your trading plan should be thought of as a template for trading the markets. Perhaps an even better way to describe a trading plan is that it's a checklist. The checklist will contain each aspect of making a trade in a logical step by step sequence that acts as your objective goal to trading the markets. So you're like this guy. Now, what have you done? You came to ETX, filled out all the papers, did all the documentation, got all your account approved, you know, put in $10,000. Okay. And you're sitting there. What's the next step? What do I got to do? Now, in essence, a trading plan will state your overall short term and long term goals as a trader and will provide you with a clear checklist of how to achieve them. Now, once we've got this, just like the guy who wants to open a store, he needs the money because he needs to pay the landlord. He needs to pay for these insurance, but he's got to pay the contractor the deposit because he wants to be open by November because he doesn't want to miss Christmas sales. And the mall told him he has to be open by November. Now he goes to mom and dad, goes to brother, says, "Okay, I need the money." Well, mom and dad and brother and best friend and sister say, "Fine, it's yours whenever you want it, but we need some type of a legal document. We need some type of a plan. We need to know, are we investing in your business? Are we getting a percentage? When are we getting paid back? Is it a loan? Is it with interest?" We have to know because on top, whether we get the money back or not, we trust you. But the fact is, we got to be able to put down our tax returns. We got to know what it is. If you go, unfortunately, don't make it, we need to know how to write it off. If it's a loan, it's a loan. If it's an investment, it's an investment. We don't care, but we want to know. Give us something in writing. Well, this is the beginnings of your business plan because now he's got to sit down and figure this out. Is he going to give her a percentage of the business? Or is it going to be a loan? And what interest rate? And how much can he pay back? And when can he start paying it back? Well, the only way to do that is to start putting stuff on a spreadsheet. So he writes up his initial business plan and he gives it to my mom and dad and sister and brother. And everybody says, "Fine, I'll write him checks." And he's got his $250,000. Now, when you're a trader, you've got your money in the account. You've come to a couple classes, you read a couple things. Okay. Are you ready to trade? No, you should still be in a demo account because you don't have a strategy yet. You don't have a plan. The most successful traders trade to a plan and may even have several plans that work together, but they always write things down. Why? Because it helps you stay focused on your trading objectives or your business objectives. And the less judgment we have to use, the better. A plan helps you maintain discipline as a trader. It should also help you trade consistently, manage your emotions, and help you improve your trading strategy. It's also important to use your plan. Many people make this mistake of spending all their time creating a plan and never implement it, or they spend all their time making trades until they have no more money. So, our buddy here finally realizes he's got all his money, but he's got all of it spent, and he hasn't even come up with inventory. He doesn't even know what to buy yet, how much it's going to take, where he's going to store it all. He hasn't ordered bags or boxes. He hasn't ordered the cash registers or computer. He hasn't talked to anybody about employees. How many employees does he need to have? The mall told him he's got to be open from 10 in the morning till 10 at night, and that's 7 days a week. So he's got to figure all this out. So now he's got to take that little plan and that idea he wrote out and develop it into a work plan. But now he realizes when he starts doing this, he needs a $500,000 in inventory. Where's this going to come from? They'll give him 30 days credit, but he's not going to turn on the inventory that quickly. He's got to have a line of credit. He's got to have capital. So he goes to the bank. And the bank says, hey, man, we'd like to talk to you. We'd like to consider you have good credit, but we need a fully developed business plan. We need to know what your sales are going to be, what your turnover is going to be, what your payroll is going to be, what your profit margins are going to be. We need to know what your utilities are going to cost you. He says, wow, I haven't even thought about this stuff. So we have to come back and he's got to start putting all these components together. In your trading plan, you do the same thing. Your trading plan structures your considering structure and monetary goals. It covers your research and education. How many hours a week are you going to spend in education? How many hours a week are you going to spend doing research, market research? Most of us that are part-time traders should only be trading one day a week, a couple hours a week. We should only be entering a couple trade because the rest of the time that you're free, you should be doing market research, doing analytics, breaking down your charts, breaking down your strategies, understanding what they do. You should be always monitoring and improving your money and risk management. Figure out your market timing, your trade mechanics, your documentation, your testing, and most critically, how you analyze your results. So make sure you do your own research and build a plan according to your needs. Find confidence in what you know. The tools you have selected for your strategy are key, from the type of charts to the specific drawing tools to even the most elaborate strategies. Now, all you guys out there have probably these very elaborate strategies. I'm going to use RSI and MACD, and when the price comes up to the next support level and MACD goes above this and RSI does that, and we have a double crossover, I'm going to trade all that. Well, the first thing you're going to write in your trading plan is going to be developing your strategy. And you say, oh, you know what? I don't want to write all that out. So I'm going to refine my strategy down to something a little bit smaller. And then I'll get it something more elaborate as I test it out. But you need to test your plan in the beginning and make sure you're on the right track. After you've begun trading, continue testing it regularly. This allows you to measure your success by clearly seeing what works and what doesn't. From there, you can tweak elements that might be weaker and not contributing to your overall goal. Ask yourself the following questions. Why am I trading? Well, your first answer to that should be to make money. And you should stop right there. If the only goal is to make as much money as you can, as fast as you can, we are ultimately doomed. Now, the answer to be should be make money or profit, but not as fast as we can, because it will never be enough. Managing your losses, though, should be your primary goal. If all you spend your time doing is getting trades and managing your loss, you'll find that you'll get enough winning trades to make profit. But this will create an environment in which profits can be generated. It's like saying if he has a store open from 10 to 10, buys the right inventory, makes an attractive window, and he picked the right location, he's going to make money anyway. But that's only if he manages his business properly. You should begin your trading plan with your strategies. So if you are trading price action setups or off key structure levels or structured trading or advanced patterns, then you should put them in first. So start out, and you don't have to start out with a thing that's 90 pages long. You don't have to start out with a thing that's 2 pages long. You don't have to even start out with good English. You can just use number 1, number 2, number 3. Set up little steps. Okay. Today we have Excel, we have Word, we have computer programs not that'll do your trading plan, that'll organize it for you. Track it down that you can rework it and rewrite it and move it around, because you don't have to rewrite it in a booklet. Like when I first started trading, we did it all on index cards. We wrote all this stuff down and we had index cards everywhere, and you couldn't look up anything out. You had to find that stupid index card. Now, having written strategies with your risk tolerance and your money management is like having a market blueprint. This blueprint is essential for developing the discipline that will lead you on the road to success. If you find yourself not following the rules in your trading plan, then you know you are deviating from your plan. So ask yourself, what are my strengths and weaknesses? How do I maximize my strengths? An example of a weakness is need to consistently watch one's trades. Is your laptop on the pillow when you go to bed at night and when you wake up in the morning and you're constantly waking up in the middle of the night monitoring your trades? So it's really difficult to make smart decisions if you're half awake. Now, once you decide what type of trader you are, you should begin to invest yourself into education and research. Make continual learning a priority, like coming to tonight's class. Each person's strategy and methodology is unique and cannot be duplicated. Therefore, your plan is most successful when it is based on your own individual needs. Evaluate your needs and your efforts. Am I a fundamental trader? Am I a technical trader? Don't try to be what you're not. Think about what you're comfortable doing. You can always learn more, get more knowledge as you go. Now, the biggest thing that we have to talk about is when you're talking about your style, your goals, your personal things. How do you trade? Not how, when do you trade? Okay. I can't tell you that. I'm not telling you what's a good time or bad time to trade. I don't know what your schedule is. I mean, do you work nights and you're free during the day? Are you off on Tuesdays and Thursdays and you work the weekends? Do you only get time to trade when the wife's got the kids at soccer practice? You got to figure this out. How many hours a week can you devote to not making physical trades, but to your trading job? Because you think of this as a job. So, how many hours a week do you have? How much you're going to spend on knowledge? How much you're going to spend on research? And then how much time you're going to spend on trades? Because the nice thing about trading is there's always markets. There's always something available to trade. You can always find trade. And even if you don't, you're not like my buddy in the retail store because number one, he can't not be open. He has to be open from 10 to 10 every day. If somebody doesn't show up to work, he's got to sit in that store. And every day that store is costing him money because he's paying rent, insurance, air conditioning, overhead. In the trading world, nothing costs us money. Okay. You've got your money in the account and it can sit there without costing you a penny for the next 6 months or next year. If you don't trade tomorrow, you go on vacation, don't trade for a week. It doesn't cost you anything. You're not missing any opportunity. You got the retail store and you miss the people walking by that like that pink sweater and the blue dress and the orange shoes and the slack. Yeah, and they went to the next shop and bought it. You lost that business, not in the trading market. Now, a strategy is a step by step systematic approach to how and when we are going to use tools to developing a sequence of analysis. When and how the analysis tools will be used, the time frames for the tools we're going to use, the sequence of analysis, and the types of orders we use. Those should all be part of our plan. Now, have you thought about all this stuff? When you're building a strategy, because too many of you go online and you learn somebody's strategy and you learn they give you 6 steps and this is what you follow. You've never broken it down. You don't analyze. You never, when this happens, do this. When that happens, do that. And when this happens, do that. Okay. Well, would you go to a surgeon and is he laying there and going in the hospital when he's learned how to do 6 steps and he has no idea because every patient's completely different and he hasn't weighed you, he hasn't checked you out, he hasn't marked on you, he hasn't even asked you what your physical impairments are, hasn't asked you if you have allergies, hasn't done blood tests, checked your heart. He just knows he's got these 6 steps to follow. Would you let him cut you open? I sure wouldn't. Now, Let's talk about your trading plan being your business plan. Now, every business has business analysts. They spend hours, day and night, accountants, bookkeepers, analyzing every part of their business because you may think you're doing well over here, but you don't realize you're not doing well over here, or you're making mistakes here and you're missing opportunities there. This is very important. Now, let's go away from my buddy in his retail store. Why do you think professional athletes that are paid millions of dollars a year, they don't have to trade, they're making millions and millions of dollars. And then they're getting millions of dollars of endorsements. Now, why do you think a professional football player spends 5 days a week on the field, in practice, in the locker room, studying plays, analyzing past plays, looking at the defense, looking at the team they're playing next, uh, you know, analyzing every potential opponent on the field, who they're going to be facing, who's going to be touching, tagging them, what strategy is going to be used, how to implement. Then they're on the field practicing them. Okay. Hours and hours, scrimmages, day in and day out. I was just reading some football player was just fined $200,000 for missing two trading days, two training days. You know, this is why it's important. So, what makes you exempt from this? A pro tennis player spent hours in the locker room, hours in the gym, hours in the sauna, hours with masseuses. It sounds really nice, but they work out their muscle, and then hours out on those courts practicing. But even when they got all that down, when they know who their opponent is, they're learning everything about their strong spots, their weak points, how to serve to them, how to return the serves, what to expect, all the odds, all the ratios, all the values. So why is a trader think that just because they shove money in an account that they're exempt from all of this work? So when developing your trading plan and approach, it's important to take other costs into consideration. Some may have more impact than others, but all contribute to your investing in your trading. Assuming we have the right strategy decided, how much equity to risk, let's figure out timing. There's all kinds of things we need to figure out. Like I said, if that tennis player knows she's going on the court at 4 o'clock tomorrow afternoon, she's already worked it all out, or he's already worked out in their head where the sun's going to be, how to hit in the opponent's blind spot, what the temperature is going to be. You know, I was reading about a runner who was competing somewhere last weekend that passed out and almost died from heat frustration. In Dubai, they were competing, you know, because she didn't train properly for that type of environment and for that type of temperature. It was, yes, it was a very high temperature day. But I read about athletes who go train on the top of mountains because they need to get the oxygen levels up there. They need to get their lungs. Okay, this is no different. This is, yes, you're not in a physical job, but you're still in a field that requires devotion, hard work, and if you want to be successful. Now, we need to ask, when do the markets open? When do they close? What instruments am I going to be trading? And this is an important one. Too many of you guys trade, and that's one of the biggest problems with CFD trading. It offers you access to so many assets that we can jump all over the place. For 8 years, I was a trader on Chicago Board of Exchange. And this was way back in 82, 83, 84. It was before computers. Not We had computers, but big, that just look like great big rooms. But there was no PCs. There was no internet. There was, old Microsoft DOS, and you had to have a monitor that was hooked up to it, and only a couple people could use it. And it wasn't, you couldn't program, you couldn't do it. A programmer could, but we didn't have any computers for trading. We were doing hand charting. We were doing everything by hand. And you know what? Most of the time, I only traded two agriculturals. That's it, because you couldn't physically do all the other work, and you only can be masters of certain things. Now, you can decide, I want to be a master of a particular strategy, be the best at that if possible. So, whatever that strategy applies, it gives you a trade. maybe. But you should become a master of only a handful of assets. Maybe the euro and the euro crosses, or maybe only the major currencies, because you can't know it all. Maybe you should only look at, if you like stocks, maybe only tech stocks. Become an expert at one field. Believe me, it'll give you all the trading opportunity you can possibly want. And then notice the time frames where there's more than two markets are open simultaneously. Like when the Chinese market is opening and the closing, and the European markets are opening, when European markets are slowing down, but the American markets are open. There's all types of differences in the markets. Okay. So all of this should be part of your decision making. Picking your time for your trades and watch the market may be easier, since there is likely a market open somewhere in the world. And that's what happens because we have so much trading that we have guys trading all times. You get a break at night. The kids are off with mom at soccer and you get a break. You know, at work, you don't have any meetings today and you got a 3 hour lunch space and you get online and trade. But the markets are different. Everything is different. When you get that extra time, study, research. But make sure you're maintaining a trading journal which has a log of all your trades. This is important because it allows you to analyze your trades, and it's the success of the plan you adopted. So I call it stick to itness. It's not really a word, but I made it a word. The creation of a trading plan is highly useful as it reduces the possibility of bad or irrational decisions. And once you build it, stick to it. Now, if I ask 100 traders if they can send me a copy of their trading plan, I guarantee you, it'll be the highest rejection level I got in my life. I have never gotten from anybody, and I have been now in this market for 45 years. I've been teaching for 14 years now. Nobody has ever sent me their own trading plan. I've asked them over and over in class. I don't care if you just send me written notes. I don't care if you just send me an Excel spreadsheet. I don't care if you send me just a whole bunch of Word docs. Don't make it pretty. I just want to see what you're using. Nobody ever sells them. So, unlike business owners who generally have a business plan in order to provide a strategic vision to employees and keep them on the right track and to focus on their primary line of business, most traders never take the time to create a business plan. Now, my buddy, the bank forced him to develop a business plan. Now, it's pretty hard to stick to because he's got to keep adding and adding and adding. Now that he's actually open, he can really understand how many footfalls he has, how many people are coming to the store, what time of day do they come in, how many employees. He knows in the morning he only needs one employee. The mall's not busy, but in the afternoon when school's out and the malls are busy, he needs to have two employees because he's got to have one watching everything because the kids are stealing them blind. And then weekends, he needs to have three employees in the store. Now he realizes he's got to put cameras in the store that he can watch from his back office because everything is getting pilfered because he's not watching his inventory. Now he never thought about how much stock he's got to have to turn this much inventory. He never thought about the right sizes. He never thought that he'd have to be buying Christmas goods in October for delivery in November, but by November he's already ordering spring goods. Now he's ordering them. He's got to pay for them. Where's the cash flow going to come? Where's he going to put all the inventory when it comes in? He's changing seasons. How's he going to run his sales? Hasn't thought about it yet. Now it's just like trading. Now there are a million articles on the web about trading plans, but what separates the articles from the rest is they show you trading plans that you can create in 10 minutes by answering a set of stupid, serious questions. I'm going to show you one, but this is not for a serious trader. And there's all types of articles, hundreds of them, thousands of them. And when you go look at them, they're all the same stupid article that the same people have been rewriting 100 times. They cover 400 words to make Google happy, and they tell you the same thing over and over and over again. Now, in most lines of business, time is the main driver for evaluating performance. Companies report on a quarterly basis. You know, your little retail store, you've got to figure out your inventory and figure out what your stock is and figure out what your size are because you got to order next quarter's goods. No, The bank wants a statement. Your family wants their that you promise them every 6 months you give them an update. So you've got to have your performance evaluated. But if you're a trader, when do you evaluate your own performance? So the answer to this question is very simple. Base your evaluation period on the number of trades placed, not the amount of time that passed. Time is irrelevant in our world. Trading is one of the few areas in this realm where the space time continuum has no relevance. Now, for me, I analyze every 10 trades. I stop every trade. I don't enter them anymore. And I go back and break down those trades because a good trade is not necessarily a trade you made money on. And a bad trade is not necessarily money when you lost. If if you properly applied your risk management and you got out of a trade with a very small loss, that's a very good trade. On the other hand, if you had a trade that made you huge profit, but it didn't do anything that you thought it was going to do, it just happened to make that's a bad trade. What strategies did you use? I have a buddy who was trading euro and gold all the time. And he's always talking about how well he's doing. And he was actually making money. But when we finally sat down and I said, let's look at your trades, and we broke it down, we realized that overall, in all of his gold trades, he technically had lost a small amount of money. His euro trades, he was doing very well. If he had gotten rid of his gold trades 6 months ago, because he thought he was doing well in gold, because one gold trade he'd lose $200, the next gold trade he'd make 400, next gold trade he'd lose 200, and he was doing a lot of work to net out almost nothing or a small loss. But his euro trades were doing quite well. Well, if he had promptly analyzed the stuff, he could have thrown out of all of his gold trades 3 months ago and not been making them and just spent his time on the euro. Or he could have fixed what he was doing wrong with gold. But because in his mind he was doing well, his account kept going up, but he didn't realize he was just doing wrong in this one area. So with me, I stop everything I'm doing after every 10 trades. Now, in my world, if I'm doing swing trading, it takes me about 3 months to place 10 swing trades. If I'm doing day trading, it takes me about 4 days. Okay. I don't trade that much. And I'm in this market full time 24/7. So, what is the number of trades you will be using when you evaluate your trading activity? You decide, but you put it in your plan because your plan includes all of this stuff. It's your step by step market goal, your step by step market process. It covers everything and anything. And then, how do you identify your performance? I believe in keep it simple, don't make it overcomplicated, but develop a standard methodology. Because remember, goals are very important, short term goals, long term goals. Because a goal without a plan is just a wish. Figure out what trading strategies you use and when and where you'll use them. Maybe you have a special strategy you use each month around the non-farms payroll report. You have a different strategy you use when we're getting for central bank hearings. You have another strategy you use when we're in risk off markets. Okay? Figure out what they are and put them down. So when we have a risk off market, you pull out this plan, this strategy you're going to use. And then you determine what you're going to do each day. Like every morning when I get up, first thing I do is when I get my computers on, I look at prices and I can look at the prices of the major assets that I trade. And I can tell you exactly what's happened with them. I know exactly why they did what they did overnight. But then I'm going to go back and make sure I have my updated support and resistance levels on my charts. I'm going to real quickly glance at all my charts. And then I'm going to go think about the day. I'm going to go read the financial news. I'm going to go through the economics calendar. You know, and these are my plans for each day. It becomes a habit. Included in your plan is how and why you're going to place your stop losses. Not a guess. Like when you're trading triangles, I always teach in my trading triangles to look for the last swing low when you're going in a buy and place your stop loss 10 pips below. Well, if that's what you're going to use that. Because then you have to apply your money management, your risk management rules to see if you can trade at that stop loss. Because the biggest way and the best way to throw bad trades in the trash is where you have to put the stop loss to make that particular trade doesn't fit your risk management, so you can't make that trade. Then you want to set up when to exit. How are you going to exit a market? What clues are you going to look at? Even though you're setting a target point, maybe you're setting a take profit point, the market's not going to necessarily ever reach that point. Do you want to see when there's a crossover, a price falls below moving average, you're going to close your trade? Whatever it's going to be, have your exit strategy determined. For some reason, traders have fooled themselves into thinking that successful trading only boils down to the latest algorithm or technical indicator. This couldn't be further thing from the truth. When you're trading, you may forget that there are human beings on the other end of the buy and sell transaction. This is a head to head competition to see who is right, the bulls or the bears. So the success factor, my friend, begins and ends with a winning attitude and a well thought out, well developed plan. It incorporates a lot of work. Then you always want to think about, and in your plan is how much money can you risk, not risk, but how much money can you invest per trade? I will only, my rule of thumb is I will only have so much per trade, and I will only have so much capital in the market at any given time. Once I've maxed out my capital, I can't place any more trades. Even though my trades are all doing well in the market, I got too much capital floating around in that market. Then my other rule of thumb, which doesn't have to be yours, but is when you take a break. When I have closed out 100 trades, for whatever reason, however long it takes, when I go down my trading journal that I'm keeping on all my closed trades and I hit 99, I know when the next trade closes, I'm shutting down my computer. I'm turning off my platforms. I'm taking one day off. That means tomorrow I'm not looking at the markets. I'm not trading. And this has nothing to do with holidays. I'm exerting my control over the market by saying, you know what? I can lead the markets for one day. Come back with fresh eyes. And then the last thing is limit up, limit down. The thing is, when you've had a good trade in the morning, you get a little bit cocky and you'll end up putting that market money back in the markets and making mistakes just because you say, I'm not going to risk more than $200 per trade. And you made $400 this morning. So, you know what? I'm going to take a $300 risk per trade. Now, it happens if we get too cocky. The same thing happens if you have a bad trade. Close your computer and walk away because your attitude will affect your trading. So when you've had a bad day, close your computer, go fishing. When you've had a really good morning, close your computer and go fishing. So just keep in mind now on your screen, you'll see what I found on the internet. This is one of the only plans I could find on the internet. This is just a starting point, but there's nothing of any value in here. But I probably saw the same basic chart in 100 different articles I looked because I really did search the internet. I mean, I'd like to find a program like you find for business plans where it asks you a zillion questions, you fill it all out and puts it into visual format, and then it asks you numbers and dollars and does all the calculation. There isn't one I could find. So think about that. I hope you don't think it was a lecture. It is so important. And that's why I sound off on this so much. It is critically important. I mean, if you looked at my desk, there's still all the boxes of index cards that I had for all those years, but now we have sticky notes. I got sticky notes everywhere. I have trading plans. I've starting trade. I have charts on my walls that I'm working on, not making a trading system, that I'm tracking a strategy. And I'm trying to work out stuff on the chart, and they are everywhere. Well, this is me. But it's important that you do this. It's important that you think of this as a business and an investment and as a job. Because if you want to make money, there's no free money in the world. The more effort you put into the job, the more it's going to give you returns. So on that note, I'm going to say goodnight to everybody. Thank you for being part of ETX, and we'll talk to you again on Tuesday. Bye now.